All right, welcome back, everyone. John Caruso here, RJO Futures. It is the evening of September 20th. We just had, of course, the FOMC meeting this earlier today. We are recording this for Thursday, September 21st, but we're going to kind of do a quick recap of the day and then hopefully get everyone set up for Thursday's trade. But first and foremost, I do have the S&P 500 up here on the board. We did mention it was last week that this 78.6 Fibonacci level here in the S&P 500. The market's really been struggling with that area. However, we did get a close over that period on 9/14, which was followed by a pretty swift rejection. So this rejection candle up here, this outside reversal, if you will, started to put a lot of immediate term downward pressure on this chart. So you can see any attempt at a bounce in here, it clearly was rejected and failed. And ultimately today, you can see where momentum, we came into the day, momentum was neutralizing. And now this evening, it's actually starting to turn negative. But you can see coming into today, we did try to retest the previous day's high, Tuesday's high, and quickly rejected, fell back below 4,500. And then, of course, today we get the hawkish pause by Powell and company, by the Federal Reserve, and the floodgates kind of opened up the rest of the way. We were warning traders in here about this period of risk that we believe that we're going to be in through from right about now through October. It's been pretty evident to us that this period of risk that we're in, a lot of these attempted rallies, attempted moves on the upside, we're likely going to fail. And that's precisely what we're seeing here today. I am starting to register an immediate term oversold signal down here on the daily chart in the S&P 500. So if you do have some aggressive shorts in this market, if you didn't cover any at the close today, you're probably going to want to look at doing so at some point tomorrow. I am going to give this a chance to get all the way down here and try to test 4,400 by tomorrow morning. However, at that point, I actually think we're going to set up for another long side trade in here that can maybe try to stretch as far as 44.85. Maybe try to take another sniff at 4,500. But ultimately, I do think we are going to work our way down towards this 43.70 and 43.50 area, which was the August low of the market, while we remain in this period of risk. So like I mentioned, I do think it's probably appropriate to start looking at booking some gains if you have caught this downside move alongside of us in the market. Book some gains. You don't have to take the entire position off, but maybe leave a core short position in there and look at starting to reset again if we do get a rally back towards 44.85 and potentially 4,500 in the S&P. That's how I'm going to look at playing this over the very near term. Now, if we start getting back above today's high, which was around 45.08, that is going to be a little bit of a warning that perhaps something is changing and we might try to work our way back to the upside. Now, I do ultimately think there's going to be a fantastic buying opportunity in this market going out into the end of the year. But right now, while we remain in this period of risk through October, you got to remember there's a lot of things coming down the pipe in October. You've got the resumption of the student loan payments. You've got the showdown in Congress over U.S. Treasury spending. So there's a lot of different catalysts that are hanging out there and hanging in the balance right now that could provide some more scare on the downside in this market. But ultimately, I am starting to get an immediate term oversold down here. So if you haven't booked some gains, you're going to probably want to look at doing so at some point by tomorrow morning, or I should say today, because we're going to release this here Thursday, September 21st. And then ultimately look for another bounce up in here that is likely going to provide another pretty good selling area for the market to ultimately try to retest those August lows. And if we can break those August lows, you can see I got this longer term trend line drawn in here. I'll go to the weekly so you can see that better. Connects the cycle low of October 2021 through the low that we saw back in March off the banking crisis or banking scare, we should say, through all the way to present day. So if we were to get down here, try to retest this area, perhaps it is 43.50. We do hold. I do ultimately think we are going to try to retest that 4,600 area again by the end of the year. But over the very near term, we're going to say over the next 5 to 6 weeks, we remain in a period of risk, and you should exercise some caution if you are long this market. In aggressive traders, we think rallies continue to be good selling opportunities until proven otherwise. So that's a look at the S&P 500. I'm going to jump over and do the gold. Gold has been carrying a slightly positive correlation to the equity markets. So you can see we had a strong day going this morning, and gold got up to 1968, pretty much the top of the range, rejected on the downside that we saw in stocks, as well as we did see a stronger dollar off of the hawkish pause rhetoric by Powell and forecast going out to next year. We did see the 10-year yield still hanging north of 430. So all of that is going to put some pressure on gold, but ultimately gold has just been respecting this range of about 1920 on the downside, and we'll call it about 2005 on the upside. So we're just kind of, just thrashing back and forth here. Gold on the downside, we did get a neutral momentum neutralized from negative. So perhaps, gold can sneak back into 1940. I ultimately think it's going to probably hold up pretty well in there and catch another bounce. And perhaps if we can retake this old peak right here at 1980, 1985, I do think we're going to make another play at 2000, which could potentially set up another opportunity for a pullback and then an eventual rally. I do have a bullish bias on gold. I do believe that this is the part of the cycle you should be incrementally grossing up your long positions in gold going out well into next year. We do actually think while the U.S. dollar is held strong for the better part of this year and is currently rallying, we actually do think at some point into the end of the year, out into early next year, something is going to change in that market, and you're going to see the market eventually become net sellers of U.S. dollars going out into next year. So that's a look at the gold market. I'm going to do crude oil quickly here for you guys. Crude oil actually did have a correction down here over the last 3-4 sessions after the October to November roll. That's been pretty standard. We've been seeing a lot of these commodity markets actually rally into expiration, and then after the contracts have been rolled forward, we start to see the market correct. We've seen that in the metals markets pretty religiously this year. But really nothing negative to say about what's going on in crude oil. Clearly, the rally started down here along 67. We did eventually push out of this sideways choppy range that we were in. We pushed out of that back in early August, corrected a bit, and then the resumption of the rally that we actually thought was going to correct a little bit deeper before we got the rally. But the rally came early. The warning sign, as soon as we took out this 84.80 level, you knew that we were going to break higher and make a play that we think is still going to make a play at this old past peak here, 93.74. We got very close to it before the rejection. The high in here got to 92.43, not quite. But ultimately, I'm going to view this pullback in here. I am getting an oversold signal in crude oil. I'm going to view this pullback. Perhaps we can get as deep as about 86.96, but I'm going to view this as a pretty good area to accumulate some long positions or gross up your long positions if you have existing longs to make a play ultimately at that 94 area and potentially beyond. So I'm going to view this pull down in here as a buying opportunity until proven otherwise in crude oil. We've got positive momentum correcting, immediate term oversold down here, and a bullish trend in crude oil. That is a trifecta in some of the criteria that we're looking for to put on some long positions. So hopefully that was helpful for everybody. We're going to catch you back here the next time. Once again, I'm John Caruso. If you have any other questions, any other markets that you want to put under the microscope, feel free to ping me at jcaruso@rjofutures.com. We also do put out a morning market insight letter every single morning to our clients. Just kind of a good way to get started. Anything that we deem important for that upcoming day that you should be watching for. We put all that out in the letter, and of course, we also put out our trend, our trend range and momentum grid goes out into that email in the morning. So best of luck to you. If you want to jump on that email or that list, feel free to ping me at jcaruso at rgofutures.com. Best of luck. We'll catch you back here next time. Take care.